Good afternoon. This is Brian Shannon from Alpha Trends Blogspot. It's Tuesday, January 30th, 2007, and the market's closed. We've got the S&P on the screen right now, and market's doing a whole bunch of nothing. Yes, I continue to think we need to be very cautious in this environment, but it doesn't look like we're in any major danger of breaking down. We do have an important potential catalyst tomorrow, that being the Federal Reserve, and I think the market is a little more vulnerable to a major move just because of the condition that it's in, being that we've experienced this large rally and we've seemed to have kind of be stuck here going sideways. So I think it's going to be very important to be extra disciplined tomorrow, and a lot of times it takes a day or two for the basically the after shocks from the Federal Reserve meeting to filter really through the market. So tomorrow's probably a good day not to trade, actually. As far as where the market is right now, we spent the day gapped higher, held on to those gains, did a whole bunch of nothing, but it's good to see that it did close back above that 5-day moving average, which is flattened out. And when you look at the shorter term moving averages, as I always point out, we had indecision represented right here with these moving averages crossing over on the 29th rather. That was yesterday. And then today, now that we're back above all those moving averages, we can breathe a little bit easier and give the benefit of the doubt in the short term to the buyers here. So it does look set up okay for upside. However, we do have a catalyst coming tomorrow that could change things very rapidly. So it's a case of continuing to be very cautious in this environment and waiting for a better opportunity to present itself to us. Right now is the time to be more, short-term trades, just basically day trades. It doesn't, especially before a Fed meeting, you don't want to get heavily involved one way or the other, having any, exposure on the long or short side. So the Nasdaq 100 has basically been trading in this range. It popped out right in here, and that had us reason for concern that it may fail. And it still may fail. Now we've got the 10-day moving average down through the 20 and 50-day moving average. So we're clearly in this indecisive phase here. There's a range-bound market, and it tells us just to back off a little bit. Keep your position size smaller, and be sure to honor your stops. Always know when the earnings are due out for these companies. So we've got a lot of individual catalysts that can either make or break a stock right now, and again, we've got that Fed meeting tomorrow. As far as the short-term trend of the Nasdaq 100, I guess you could right now call it neutral. The stock has just been kind of chopping back and forth in here. I think maybe getting above this level here, above 43.95 or so, that might be a catalyst that brings it back up to the next area where we might find a little bit of resistance at about $4.45. Obviously, the important level of support continues to be down near 43.40. Any major break of that level, meaning that if it broke down and was unable to recover quickly, then this market could be for a lot more trouble. And again, just to remind you, that's the level from actually this last Federal Reserve meeting, which occurred right here on this day. This was the Federal Reserve meeting. It sold off hard, made the low for the year in there, and then we saw the market turn right around. So in that case, the initial knee-jerk reaction of the Federal Reserve decision or lack of movement in monetary policy brought about initial fear, but then the buyers came in and saved the day. And look how it's been holding that 5-day moving average. And right now, I think, again, getting back above this level here, that could bring us up to the next level, but within an overall range-bound market, it's really not much to get excited about. Semiconductors are back up to the middle of their range in here, just a neutral market at best. The volume has been dropping off in here lately. It's not able to really continue to move higher, so we have to continue to be very cautious in here. This 5-day moving average might be flattening out. I think below 33.50 or so, probably even 33.40. It's time to get extremely defensive once again in these semis. They are making these lower highs in here over the last 3 or 4 sessions, and that tells us, again, just be cautious with this group. The mid caps are the one area that really stands out, and these guys closed at an all-time high today. Not just a year high, but an all-time high. So the mid caps, a lot of people have been calling for them to discontinue their leadership. However, they just continue to be the group that leads this market higher. It's typically not a group that will drag the rest of the market with it, but if you're in these stocks, obviously this is the place to be, and this is where we're seeing good profitability. So I think the best level of near-term support is probably right down here at this 49.30 level that acted as resistance here, and then support a couple days later, that is yesterday. So mid caps can continue to give them the benefit of the doubt. This is where the real strength in this market is. Let's take a look at the stocks we've been involved in. Nasdaq.com, or whatever they call it, Nasdaq Stock Market. Today's high was 33.89. Our stop was at 33.90 on that short position. So this was a perfectly placed stop. More lucky than anything, though. But we got short at $34 a share. Let's lower our stop down to 33.60 now in the Nasdaq stock market, so we can lock in some of those gains. Here's a case where the last one was a perfect stop. In ICGE, though, I suggested a stop of $11.22. Today's stop was $11.21. So we were stopped out with a 12-cent gain in shares of ICGE. We'll no longer look at that one. Enzon, ENZN, we got involved in this one yesterday at $8.80. It did manage to keep us in with our stop that was, let me just get my trend tool back. But anyways, we got involved at $8.80, and our stop was down there at 68 cents or whatever it was. I suggested raising it to 75 cents for today. So we're still in this one. I think that now you want to raise your stop to $8.94 in shares of Enzon. That'll give us about a 14-cent gain if we were to stay in that one. Avanex, AVNX, this one we wanted to buy above 25 cents today, and it did trade at 26 cents, so there was an official entry there, and there was an official stop out with a loss here of 7 cents as the stock broke down through that 18-cent level where our stop was today. We also got stopped out of Biosite, BSTE. We were looking for an initial pullback to 53.20 in here, and then the buy strength at 53.35. I think it's probably for the best that we took a small loss in here of a quarter, because these guys are due to report earnings after the close today anyways. I was going to make a post about that, but then it was stopped out, so I didn't figure there was much point in writing a post about that. eBay, we were to get long above 32.15. That did occur, and our stop, well, today's low was 31.90. Our stop was at 31.86. I think you can leave your stop at 31.86 in shares of eBay right now. And as far as the short side goes, we're looking at Sonic Solution first. Sonic Corp above $18.20. The high was 19 cents. There should have been no entry taken in there. And then we were looking to sell short INAP on weakness below 1760. The stock gapped higher today and just continued to move higher, so no trade should have been taken there.